Forex Chart Formation Patterns Lesson 5. Learn Forex Bear Flag Patterns. If there is a continued pattern in bearish trend, it's a bear flag. It follows a strong move downwards and comprises a flagpole as the strong move to the downside, plus a consolidation phase, which is known as the flag. Looking at the charts now, you can see there's been a strong bearish move. But as the market needs to adjust to the new lower prices, it goes into consolidation phase and the price retraces higher in a narrow range. Take note that for it to be a genuine bear flag, the two lines forming the flag need to be parallel, but often will be sloping upwards. There are two basic approaches to entering the market with this pattern. Aggressive traders will enter at the top of the flag for the maximum profit, whereas conservative traders will enter only when the price breaks from the formation. The price target for this formation should be the height of the flagpole measured down from the top of the flag.